Just quickly to go over the recent updates that we just saw from RH. So most of that stuff is a little difficult when you're actually just looking at it. What you're seeing is the syncing of the nodes, and then this was also that reference where he says the Geth and EBS snapshots. So those aren't the snapshots that we're thinking colloquially as snapshots, like the things that we've been talking about for a long time. That's a different kind of snapshot, and I'll explain that in just a second. So with the snapshot being ready for Geth, that's actually a good sign. That means they have all those things synced and handled, which is strong. On that 7 of 16, he did explain that in longer form a while back. What it is there's just 16 different stages to actually getting one of these full nodes set up. And the nodes are what have all this blockchain data that help aggregate for different sources. So like the blockchain explorers, and then also similar things that users don't really utilize, but people building applications do. Archive nodes, full nodes, these things. They're essentially like the blockchain explorer for applications. That's what people are using on the backside. So when you see like analytics pages, all those types of things are all using archive nodes and full nodes. So that's what he's explaining there is that process is basically getting those nodes synced, and syncing is where they're literally going through and basically loading in all of that blockchain data. It takes a very long time. So to set up a full node, you actually have to go back from the beginning of ETH. So you basically have a block every 12 seconds all the way up until now. So it takes a huge amount of time. I can't remember how many terabytes of data now to get all these things caught up. So one of the steps of what they're doing here is one, getting their own node set up. But also when you read that snapshot, it's not the snapshot that we think of, but what that snapshot is for those of us that are going to run nodes. If you can basically take a snapshot where it's a section of data that's much easier to process and download. So once you get the first couple of these nodes synced, you can actually, when the rest of us set up nodes and these things, you can use that snapshot and they update much quicker, and it saves a ton of that time. One, it's just convenience, right? No one wants to sit around and actually have these things taking weeks and days and days and days to get synced. The other is that you also have less lag time when it comes to setting up the network. So for a lot of these applications, you want to get going quickly. Once things are set up. So like if you go to ETH now and it takes an extra day or two to set up a node, probably no big deal. But early on in the chain, having applications wait a few extra days, that's a few extra days without service. So it can make a big difference. So that's what all those snapshots are. They're taking all this aggregated data and getting it ready so that people's nodes can be up quicker and that people can go on and get their applications rocking quickly. Let's see. And then on the bottom there, you'll see again the Block Explorer. That's always nice to see. So most of us who have used it, Block Scout is not great. So seeing the new Block Explorer is nice. A cleaner process, some of those things. Hopefully we'll see more development on there as well. Those are utilities again on the average user. Maybe they don't use them as often, but especially when you have more people come on board as the ecosystem grows, having a nice Block Explorer is a big deal. It's nice to have that kind of integration in hardware. It's also one of those things that you don't necessarily have to have a very high level of sophistication to know that one looks clean and is a little more bougie. So there's some bragging rights in that as well, is that people want to see nice infrastructure on the chain to come build. And it's no different than if you were setting up any other kind of business. So if you were building something somewhere and everything else about the city looked nice, it's probably a place you want to build a nice shop. So having high quality infrastructure, snapshots, those are things that, again, users won't see, but it matters to people who are building on chain. Having that kind of a robust infrastructure around to make development simple and seamless and easy is a big deal. Like guys like Gamma, a lot of people know Gamma and have seen some of the things he's done. I actually think he's on a live stream right now. Having snapshots and things like that for people who are doing things like Gamma makes all the difference in the world for them. So that's all we're seeing on the update is they're going through looking from it. If you're trying to read between the lines, again, this is more speculative. If they're already having all the clients done and configurations are set up and they're going through syncing and doing snapshots, you would assume that the vast majority of stuff is done, which again, isn't super clarifying, but it is what it is. We got to read between the lines on some of these things. So that's what all the updates are. It's just showing node infrastructure getting set up, that the clients for running validator nodes and these things, this is all back-end stuff, is all situated. If you look at the picture here, I'm trying to see what it actually says. So you can see like there's going through some blocks and they're actually doing some test fees on there. So again, they're running through and just pushing through the network. So V3, at least from there, looks like it's functional and up. It doesn't mean that it's necessarily stable. That's one of those hard things to tell from just the snapshot pictures. But you can see that everything's set up and running, and hopefully we'll have good clarity before too long. So I guess we're what is it now? It's 14 days, 2 weeks. That's where we're at.
I need to ask the devs.
I don't know, man. You're a good looking guy. I don't know that you got the mug for it. Me neither. That I got to admit, I think the girls got it too heavy on the end there. You know, it kind of turned a little toxic. But that couple of days where the oh, I'm not a hot enough girl to get dev updates, that was pretty hysterical. Again, went meant in good humor, not trying to go after the girls. That stuff was pretty hysterical, man. Seeing Cabana change his picture and stuff, that's good stuff for the community, man. That stuff had me cracked up for a while. Trillion, what's good, brother?
Dude, hanging in there, man. I don't I know how this FOMC meeting's gonna go, but every time this happens, I'm always like on edge, bro. So yeah, but I agree with everything you said. I would just kind of put out if people are looking at timelines, like there's still a couple steps that have to be done, but this is like gonna be measured in weeks. So after they get this snap done, they're still gonna so there's apparently a rate limiter. Walrus, you could probably talk more about this. So what they don't want to have happen is for someone to be able to spin up a bunch of bad nodes very quickly, and I guess they put in some kind of logic to limit that. So the one other thing that is going to have to happen after they get this part of it done is they're going to have to actually go through the process of setting up a node, just like Gamma would, or you would, or any of us would, and just make sure that they can't introduce a whole bunch of bad nodes quickly. But this is all stuff that's going to be measured in maybe a week or two, stuff like that. So I don't know, like I know there was that stream from 2 weeks ago that said it was maybe 3 weeks out. I would say that's we're really closing in on that timeline. I don't think it's a week, but these last few steps, as long as they go well, like we are very close.
Yeah, and the so on the rate limiting, if people probably forgot, it was again so much time has passed and there's so much chaos and crypto moves so quickly. When they were actually bringing up V2B, it actually went down for a brief time there. It actually halted, and it wasn't that anything failed. It's just that you have to have a certain amount of nodes operating in a certain way and being functional and synced and on to make sure that the chain doesn't slow down. So it was a little different consensus mechanism then, but currently now you basically have to have 60% of the nodes up. So again, if we're kind of speculating, I would imagine that the core dev team probably spins up. I mean, again, I just, actually pick out a number, but just as a number, say basically 100. And that would say like, okay, we would have to have basically 33 nodes brought up in a row that aren't functioning before we start to get into that territory where it can affect the actual network. So they'll end up spinning up a ton of these validators and having basically some cushion for what Trillion's saying. One, the issues that happened around V2B, if you looked at most of them, kind of just gauging from the outside, it actually looked like people just weren't paying attention. And at the time, you could basically just register a node when they were trying to delegate. So we won't really have some of that same issue here because now there's no delegation. So people won't be doing this on accident, accidentally registering one, things like that. But you basically have to have enough infrastructure, enough nodes running that as people, again, because the rest of us are going to screw stuff up, right? A lot of us will probably be looking at running, some nodes at home. We're all going to try to do our thing to participate in the network, take some yield, all these types of things. So if we're sitting in these different places and we're, again, a lot of us are offering for the first time, they'll have to make sure there's enough cushion so that, if, me and I see LV and, some of these guys in here, we're going to come in here and screw stuff up, right? So like we're going to come in and we got to make sure that those guys have enough nodes up that as people come in, there's space essentially for allowing standard users to come in and make mistakes, get nodes up, and make sure these things sync properly and so it doesn't cause any network stalls. So that'll be some of what they do beforehand. So once they launch V3, they'll go through, they'll run the AMM. There might be some other general house cleaning. They actually have to do the contracts actually have to go and issue all the Pulse and Pulsex. They'll do some verification testing. They might even do a load spike there early on. They'll get all their nodes up. They may even do some testing with like Pulse RAM. They might go in there with Pulsex and play with a few different things. And then once it's up and running, they've gone through all this sort of launching or bootstrapping. There's a few different terms. Then they'll say like, all right, cool, it's open. And then they'll just basically give everybody the RPC, and then we can jump on and start playing with V3. So again, that's what Trion's describing there with all those extra nodes. The other, you can also have some like for a second there, I thought you were gonna get real technical. I thought you were gonna bring up rate limiting on archive nodes, like trying to stop from like DDoS attacks. And I was gonna be like, Trillion, is it that kind of party, man? It's a little early for me. I didn't think we were gonna break that down right now.
Well, the archive thing is actually cool because you're going to get a copy of all the proof of work Ethereum, the proof of stake Ethereum up until now. And people actually charge for that, to like get access to archive nodes. So yeah, there's a lot you can do, but yeah, let's save that one.
Yeah, I was gonna say that's a heavy dose of conversation. So we're gonna anyone's welcome to come up. Like I said, we're gonna talk a little game theory. I'm gonna invite a few of these guys up here. If anyone has questions on some of this launch strategy or the ratio trading is a big one. There'll be a few things that are kind of interesting. Some people will be able to you'll probably see some interesting stuff that we may not be able to look at initially, but probably a week or 2 weeks after launch, after the all the hype green candle starts to fade for just a second, so people take some deep breaths. I'll be really interested to see how many people have these plans in place to go directly engage with these liquidity pools from all these things that we don't have front ends on, and basically go and do some scripted arbitrage opportunities, especially with like the stable coins and a few things. That'll be a really interesting thing to see play out early on. And so that you'll see that in general, most places don't see too big of a spread. So if any of us have used 1inch, or if they've used, Matcha or Uniswap, or again, even if you've actually ever paid attention to looking at Uniswap when you actually just hit swap, you'll see all these different rates, right? Some of that is fee structure, some of that is order execution, and some of it is that there's actually a different price. So in general, we say that, hey, the price of whatever is one, right? So like a lot of us will like pull up Staker app, look at the price. Well, that price is just a reference to one pool in general. And sometimes if you see, depending on where it comes from, if you see like coin ranking sites or centralized exchanges or any of those things, that's aggregated data. So it's actually arbing a few of those things for you, or maybe it's just pulling from the big pool. But prices can be different, right? So like you can sell the same product for different prices in standard, right? So like eggs right now are like $45 a dozen. Well, across the street, they may be 47. So what's the price? Well, the price is whatever you're paying, right? So with a lot of these other liquidity pools, things like Balancer and Curve and Yearn, and some of these obscure things, you're going to see pools that have liquidity that don't have front ends, that aren't operating. And that's where we'll see some really interesting arbitrage opportunities, where you might see players, especially for like USDC, DAI, things that we know are broken, as everyone rushes to dump those and grab copies they'll find valuable, to be able to get what will be essentially valueless USDC will be very, very expensive. Well, if you can pick it up for essentially nothing and go to interact with these pools that aren't being engaged with, like Pulsex is, there'll probably be some really, really opportunities for some of these guys that are more advanced to go in here and scoop some of that stuff up. So I'll be interested to see how sort of self-correcting the market is and how fast it is, what levels these guys really get aggressive. Typically ARBs, even a few percent is usually worth it if you have a bag, right? So, if you take a 3% price difference, most of us may not even pay attention. Some of us pay 3% fees on onboarding. You don't even notice things like that. But if you got $1 million in capital and you can move 3% around, well, like you just made several $1,000s in a quick move, depending on how well you can execute that order. On Pulsechain with some of these other copies, I mean, there could be insane swings. I mean, like 50-60%, where people are going through and just moving these things through as fast as possible. So I'll be really interested to see where that's at. Trillian, I think you've touched on that a few times, haven't you?
Yeah, there's gonna be some crazy stuff. It really depends. Like right now, we don't see too much liquidation arbitrage, but that's gonna be a huge opportunity. Who knows how that's gonna pan out? But yeah, I mean, it's gonna take a little time for things to settle in. So don't be fooled by the short-term volatility. There's not gonna be a ton of liquidity for you to be able to capitalize on to begin with. So like it's one of those. It's almost like a mirage. I would think about it. You could see the price swing in crazy ways, but don't necessarily take that as a good opportunity for you. We do have to be a bit patient to let things kind of price in. Yeah, it all depends. There's just going to be so much more room for arbitrage than there is currently on Ethereum, and it's just a matter of who shows up to play.
Well, remember last week when we were speaking about the ratio trading, and I mentioned that I was potentially going to swap, half of my Pulsex bag, maybe, for Hex. Well, here we are, and I'm definitely not doing that anymore. So, my whole plans changed within this past week, thanks to,
See,
some
I
of these.
commend you. I honestly commend you on that, because that's the number one thing, is you have to sort of be flexible and adapt very quickly to what's actually happening, and kind of let go of a lot of these preconceived notions. And I believe that's going to be a winning formula, but we still have to see what actually transpires and how quickly that flips, because we have to remember it swings. It's going to swing both ways. So yeah, I just wouldn't make any abrupt moves. Like try to figure out like a ratio, like we talked about, that you can kind of handle, whether that's in tenths or in quarters or in thirds, something like that. Just keep giving yourself the best opportunity, and the most options.
Yeah, I mean, literally, hashtag never selling anything now, and that's obviously I see the benefit in that, being a holder of Pulsex, and all these other liquid loans, Power City, Internet Money, etc. For me now, the whole ecosystem just makes a lot more sense than it did last week now.
Absolutely, man. STC, what's up, brother?
Hey, what's going on? I just had a quick question. I don't know if you've already answered it or not, but on this testnet V3, I'm curious if anyone knows if the sacrifice totals will be airdropped in the testnet, or if we're just going off of ETH copy.
So well, those are two separate things. So the ETH is just the system state, but yeah, they'll put out all the tokens same way they did is on V2B. Yep, that's a simple one. And then someone messaged here. I don't know if Pulse Libre's in here, but the name of that block explorer that you're seeing, it's an open source one. It's Beacon Chain Explorer, but it's Beacon, like BEACON So there's a period in the middle of it. I can tag it here in a little bit, but yeah, it's another open source Ethereum explorer. It works well. And then its site also, if you want to use that and get used to like searching some of those things over there, like there's like you can use like Beacon Scan as one way to look at that chain. But yeah, the one that you're seeing there is Beacon Chain with, like I said, Beacon CHA.IN. See Tangent, a few of the people in the room now. See if he wants to come up and speak. I know it's a little late where he's at. Sure, yeah, man. I think we're gonna end up with what could basically be an economics textbook off of all the events we have around launch. Not just all the like number go up, kind of crazy stuff that a lot of us are excited for, but seeing how some of these ARBs play out, seeing how quick bridges open, seeing ratio trading. Like I just feel like there'll be so much information. Like we're gonna have Twitter thread after Twitter thread of breaking down how this first, call it 5 days or so goes. I mean, obviously every launch is crazy, but there's just so many dynamics. And what I think is different here versus like what you saw with like ETHW or ETHFair, those is people have had so much time to sit here and look into these things now that we've got guns ready, right? Like we have ammo. Like we've had time to sit here and think about these things. And like, Nas, and I mean, Nas is a smart guy, but he's not writing code or any stretch. And he's had 3 or 4 interesting strategies in Pivot. I see Red Squirrel's in here. He's always drawing up, these world map crazy things with all his infographics with people's strategies for some of this stuff. So it'll be incredible to see what actually takes place and if it's anywhere near as illustrious and insane as we think it could be.
Dude, in fact, I would just block out the next 30 days after the launch and just really pay attention. Because look, in the beginning, if you can kind of keep track, and I know it's easy to kind of get, especially if things go well, it's easy to kind of put it in the back of your mind. But if you really pay attention those first 30 days, I would say it could be less. I mean, look, everybody's stamina is different. You could go more than that. But it's those are going to be the very formative days of this chain, and you're going to have such an advantage you couldn't even believe. I think with everything going on, all the crazy turmoil going on in like the greater markets, I believe we've actually decreased the uncertainty level with this L1 launching. So yeah, the biggest opportunity we could have asked for.
Couple new speakers, Tangent, El Professor. How are y'all?
Hey, Warner's doing good. Had a quick question with respect to liquid loans. I've been following you guys since day one. So just wanted to understand, with all the time that's passed, any significant changes that's been done to the protocol from what it was first advertised? And secondly, we've been hearing that you guys were looking to launch maybe, I think, within 30 days of the mainnet. Does that still hold true? Or do you guys anticipate any further delays after mainnet is launched?
Yeah, so some of the magic about everything that we're doing is it's vanilla. Like it's meant to be that way. There's a lot of benefits and I think in modularity. So our goal from the beginning is like delivering vanilla correctly, simply. So nothing has changed for us as far as when we initially launched. There's most of what we've had the code ready for a length of time. This is all that we've been doing is basically, marketing efforts, reaching on the outside, trying to bring in new protocols, working on getting more decentralization at the front ends, trying to make sure that we're going to have, the Oracle up and very well expanded, archive nodes, multi-sig, sort of all this extra infrastructure that we build around. But as far as like, hey, what does LL do? How's it going to work? All those things, everything's exactly as you would have seen from the beginning. Clean fork of Liquidity, swapping over to Pulse, very minimal changes. Our front end may look a little different than when you first saw it. And we will, on V3, we'll have all our analytics up. It will take a little bit of time for the analytics to populate. So it'll be up, but again, you can't look at much of a graph when it's like, hey, day one, day two. So it'll take some time for the analytics to populate on V3, but we'll get a chance to see, hey, here's the fully functional front end with all these types of things, and all the analytics will all be there nice and displayed out, so it'll look very clean. As far as our launch time, I'm actually excited about that. This makes it much easier on me, actually. So we'll still probably be in that 30 to 60 day range. It's nothing about us delaying. Like, we could just, launch as soon as we're ready. Part of it is making sure that we have enough of the Oracle is all set up and run, so that there's enough decentralizers in there, that the price feeds are stable, and then again, all the liquidity pools essentially take their time to shake out. So it's one of those things where most of the, all the loan token, stability pool, staking loan, all those things are very, very simple. But when it comes to the lending side, you just want to make sure that some of that volatility has come in, that prices settled to some degree, so that people can actually make rational decisions. But so that's what it is. It's a cushion for mechanics, not for anything that we have a delay on. So everything's looking great. We're really happy. And for me personally, why I'm excited about that is because that gives me time to not have to worry about doing anything at LL around launch. And I can do, the same kind of admin stuff that, I did back when, like, we were getting ready for sacrifice and things like that. So as we get a little closer, I know a few of the old admins that they don't really do much on Twitter, and as the Telegram has gotten calm, have reached out. Marcus, some of the really, really cool guys back in the day that a lot of the day one and sacrificers will remember. They've already reached back out, and we'll have multiple Twitter spaces. We'll probably have Pulsex and Pulse rooms open, and we'll have good communication between all those things. So a lot of the community members have already pitched in and been like, hey, we'll be available. So most of us we'll have 24-hour kind of like round the clock service in multiple rooms on Twitter and on Pulsechain and Pulsex. And we'll make sure that we make sure some of those things are a little more disclosed. We're going to put out a lot of extra information around launch time to make sure that everyone's safe with the communities. So it's much easier on me personally that we have that delay, because that allows me to come in and do more of the community stuff.
It's funny you mentioned that, Walrus. I was literally reminiscing about all of that. Like, I was thinking to myself earlier, those early days of when the Pulsechain sacrifice was announced, there was me, little old noob me, listening to you, Papa Bona, Mandalorian, talking about anything and everything. And then all of a sudden, one day, I just get this random message from Jesse just to say, welcome to admin status. And, the rest, as they say, is history.
It's wild. There's a couple of those spaces, and I know we got a few hands, so I'll quit rambling. Some of those spaces early on have kind of turned into the crypto version of the PayPal mafia. So many different people have gone out and branched and either just been very, very involved with the community, or are launching different projects, or supporting infrastructure, or doing outreach. And yeah, it's pretty wild how what initially started, a handful of, I think most of the time, those real early days of the Telegram was like 20 or 30 people in there. It's just a handful of nerds in there talking about crypto stuff that hasn't even launched yet, and it has a lot of good times. I think Armor, I think your hand was up last, but I think you were in first, so we'll go Armor, then Joseph, then Flawless. Armor, what's up, brother?
I may have missed this because I wasn't in here on the other space, unfortunately, but don't you think that I don't plan on making ratio trades, but if you were to do it with any kind of quantity, you should probably do almost all of those with limit orders, don't you think? And even for those people that he was thought about, swapping Pulsex for Hex, I mean, it's not a bad idea to set in kind of a crazy limit order, because not only it might hit, but it kind of might help the community with the huge volatility swings to kind of trigger in some of these limit orders. Have you guys talked about that?
So the ratio trading always kind of comes up in segmented areas, but we haven't talked about the limit order side of it. So if the ratio trading, the idea is it actually functions no different. So when we say ratio trading, all we're referring to is the time before the bridge opens and basically wrapped USDC, DAI, or ETH comes in, and we get that dollar value on our UI. So right now, you're already ratio trading. Most of us just use the user interface of whatever our native currency is as essentially a handicap or as a placeholder. So USDC, we think of as a dollar, but Ethereum and Uniswap or Matcha or 1inch, they don't know that we think that USDC is a dollar. All they think about is that there's an ERC and another ERC, and they're paired, and how that ratio is what dictates how many you get of one for the other. So that dollar value, that's added on top. Like that doesn't come from Ethereum, that doesn't come from Uniswap. They don't know. those codes don't know what dollars are. So the reason that the ratio trading is difficult is because you have the natural volatility of all these things because everything's just launched, and then you don't have dollar value. So it's already hard to make trades, and it's hard to do with volatility, and now it's even harder because you don't have the dollar value. So that was some just background, just because, again, I usually like to answer for the room. So when it comes to the limit order side, it can help to some degree with the volatility. I would imagine that's kind of the I just don't really see it curving much of the volatility. It can definitely help to some degree, but it's still just going to be so chaotic those first couple of days. If you are doing them, one of the places to start as a parentheses price is you can take the ratio of whatever the asset is that you're wanting to trade. If it's not Pulse and Pulsex, you can take that ratio and derive the current price from it. So you can look at, say, Hex. And so you can take the Hex to ETH price, and you can take that ratio and then adjust for the supply difference in Pulse. And you kind of have what should be pretty close to that starting ratio. So usually when I do that math, it comes out here recently, it's come out between like 16 to 19 Pulse per Hex. So that's a decent place for some of these starting points. So if people have a particular asset, Hex or one of these things that they're really trying to get into, or Maxi, or any of these things we know are going to have a lot of value that are going to function on the other side, you can take their ratio currently to ETH, and that can kind of give you an idea of where those starting points are going to work out. So you can look and see, okay, that's where this thing is starting, and okay, where do I see my next price target, right? But so that gives you a place to start.
So just to chime in there, Wallace, what Armour's asked then. So during the ratio trading period, I'm assuming obviously we'll be able to still set limit orders on Pulsex, won't we?
Correct. Everything on the chain will function 100% the same because, again, none of these things know that we think that these things are worth dollars. They all just work off code. So none of those things function, and that dollar value matters on any of those assets for trading. Joseph, what's up, brother?
Doing pretty good, Wars. Thanks for having me on, man. I have a liquid loan. I have 2 liquid loan questions for you. One of the things that I noticed is that liquidity never really added something like Uniswap as something to be collateralized on Ethereum. So my question to you, my first question to you is, has Liquid Loans thought about adding PostX? And if not, what were the pros and cons of adding something like PostX to Liquid Loans? And then the second question is, I'm just trying to wrap this around my head. If I'm if I'm running my own nodes, then technically, and then I can stake my own PLSS. I mean my own PLS. But what is the benefit of staking the PLS in Liquid Loans? Those are my 2 questions.
So the first one is there's another team that's doing the PLSX. Power City guys are going to launch that in some degree. They made the announcement. They haven't done any of the specifics on it. We haven't considered it because originally for a lot of us, again, it's vanilla. We're just trying to go in on the core idea of what we set out to do in the beginning. So we'll have just the PLS. Hey, I sent you a DM, Niles. We don't want to bring Cleo up. For PLS, it's going to be the most liquid. It'll have the most amount of liquidity likely and the most pairings. So that was always the first goal. PLSX has 2 drawbacks about doing it originally, and it doesn't mean that it can't function well and that it can't be price positive for PulseX. But compared to PLS, the drawbacks you'd have is that it'll have less liquidity in general as far as pairings. Now, if you look on chain, currently at V2B, it has a lot more liquidity than what most of us would have initially thought. So that's a bit of a moving goalpost there to some degree. Now, we'll see how it ends up playing out on main chain, and I would imagine that those guys are going to do the same thing, and they would tell you the same thing, assuming it has the same liquidity and assuming that it gets some level of stability. Then they'll launch theirs with probably a longer delay. I mean, again, we'd have to just see. That team will have to handle the specifics, but it's the same thing. It's about having a collateral that has enough pairings, enough liquidity that you can't have manipulation, that you can get good price feeds, that it's just a sound structure. And you can look at like some smaller projects where they've had DAOs manipulated, like Mango's a good one, or projects like Aave, GMX, or Fiat, what they're building. On tokens, something like Hex or something that's smaller, they put restrictions on them to stop them from being easily manipulated so that you can't play like flash loan games with very low prices and do all kinds of gamesmanship depending on what the particular system system dynamics are. But with something like Liquidity, you can't put those restrictions on there. So you could you could spike the price, take huge loans and cause different things. So you got to be careful about the collateral choice. The other on Pulsex is that you have DAO voting and you have single-sided staking. And if you lock up that collateral, then you can't use those assets there. So in some ways, it's not as strong as PLS as a general collateral. But if you still have a bunch of value in Pulsex, then a lot of the value proposition for the Liquidity code still functions really well there. So that product can still work really well. It'll probably be price positive for Pulsex. So that one will just play a little differently. But for us, it was about taking any minimal amount of risk difference there and basically delivering on what was sound and clean. And I said the Power City guys are going to release theirs. They'll probably have more details on it here pretty soon. And then what was the second question?
Just the benefit of staking my PLS with liquid loans. What is what are the risks? What are the rewards associated with if I wanted to say, hey, I'm gonna stake my PLS, in the liquid loans protocol?
By staking the PLS, do you mean collateralizing it and actually using like the lending protocol side of it, or because you can't just stake PLS?
Gotcha. Okay, so I got it wrong then. So I can't just stake my PLS, right?
Originally, Joseph, there was going to be the liquid loans validator node, which you were able to stake your PLS to, but obviously with the changes that no longer exists.
Okay. So yeah, okay. So thanks for clearing that up for me.
Absolutely. So now running the validators, this is something that I'll hint at, and then Gamma will do a lot more work on this stuff, and I'll probably get on the stream with Gamma. Hopefully between the two of us, between Gamma's big brain and my ability to not be smart but sound smart, we can get out some of this information. The running a validator for E2.0 is noticeably different risk profile from running what we would have seen. So some of the things that we would have heard Richard or a lot of the community say about difficulties in running a validator on the previous Pulse chain are very much reduced running on E2.0. So the chances that you get slashed or penalized are infinitely less running an E2.0 validator. The hardware requirements are much less. And you don't have to be ranked in that order. You don't have to be in the top delegate anymore. There's no delegation. So many more people are going to run validators. The hardware is not that difficult. I see Bullish in the room. He's done some cool stuff where he runs them with very low end hardware. And you don't have to have the same reservation. So they can be ran from home. You don't have to have the same level of redundancies like backup power supplies and a second internet connection and these things. So more and more people are going to run the validators. And if you're in it, again, it's very productive for the ecosystem and the chain to have that level of decentralization. So if you're interested in doing that stuff, we'll definitely have some more information on it. It's more of a task than just, clicking a front end on software, but it's not so difficult that, this won't be something that somebody who really wants to do it and put a little time into it can figure out. I got you covered up.
Just to expand on what Joseph just asked there as well. I mean, that's one of the reasons why my plan of action has changed, Joseph, with the announcement from the Power City guys about them, releasing literally the exact same thing as liquid loans, but for Pulsex. And anybody who's been in liquid loans since last year, anybody who's read the white paper, we guys, and you're also, sacrifices for Pulsex. You're already ahead of the curve when it comes to knowing how that protocol is going to work, because it's literally exactly the same. And that in itself, I think is a godsend for us. It saved a lot of stress of trying to learn something new. You already know it.
Yeah, the liquid code is amazing, right? Tangent, I think we got a chance to have you say hello, man. We jumped in, people started talking, we started answering questions. How are you, brother?
All good. I'm just listening and loving what I'm hearing. I really just wanted to tell everyone that I'm not ready in terms of I'm going to be using testnet time to continue pulling economic energy back from L2s and other L1 chains, like EVM compatible chains, and I guess other assets as well. And with things like this, it seems like we've had a ridiculous amount of time to get ready, but I took my foot off the gas and now there's still things I need to do. So I guess this is the time where people need to get, if you've lost that momentum where everyone was sort of like preparing and thinking about what they were going to do, I think a lot of people would have lost momentum when the delays looked like they were going to be longer than expected. And now's the time to refocus and get ready.
100%. Yeah, that's why we're kind of going back to basics, touching on all this ratio trading, launch phase cycles, getting everyone dialed back in, man. So it'll be a lot of fun. Flawless. I'm glad we got you back up. What's going on?
Hey, yeah, I don't know. I had some technical difficulties. I don't know, but I just had one question about liquid loans. I know there's liquidity audits, but how close are you guys to getting the auditing done for LO?
Yeah, we basically have everything ready as far as the code. For us on the auditing side, we're getting all our documentation together, launching on V3 with finalization, and then we'll get the auditing process started. So sometimes those guys can take a little bit, and again, we don't really have like accurate dates on the chain as far as like when mainnet will be live. But I don't think we'll have any problem having like all the audits all available and handled well before launch.
Okay, awesome. That's all I had.
Won't there be an actual final audit post-launch after mainnet after Pulse mainnet goes live? Won't there be a final audit then?
Yes, you want the contract to be on chain whenever you do the audit. Otherwise, they can just audit that, but it doesn't mean that what you actually put on chain is the same as what they audit.
Yeah, so we have to wait for the mainnet to be live to conduct that. Yeah.
Correct. Yep. And that's something on audits in general. One Flawless, I'm glad you asked. Everyone should always ask for those types of things. On audits, there's a few things that are kind of crucial. One is people should go give them a read. One, people can just say, yes, we've been audited. And a lot of times people don't verify. Audits don't also tell people quite what they think. Something can be audited, and it doesn't necessarily mean that it's good code. It just means that the code does and is what they say. So you still want to look at audits. You can pass an audit and still have minor concerns or certain externalities. So like you can pass an audit for code that has an admin key, and you want to know what those functions are. So there's places where admin keys make a lot of sense and you need them for certain governance models, but you want to make sure that you can look at the audit and make sure that you understand that what they say the admin key is doing is also what the audit key says it can do, or what the audit says it's going to do. So you want to make sure that, again, the audit actually is saying what you want it to. You want to look for minor issues. And with audits, an audit doesn't mean that they're bulletproof. That just means that another smart team looked at it and said this is good, right? So this is like, the Pulse Police guys, they go in and do audits, they look over things. It's a little more informal. To me, with audits, audits should always be done because there's such a low barrier to getting them handled that there's really no reason to not do them. And the other side is that the audit is really almost more about the team than it is about the code itself in some ways, because an audit doesn't necessarily tell me that code is good, but a team not willing to get an audit gives me hints about what the team is like. So that's where I like to look at audits is I just want to make sure that people understand they're valuable, they should be done, but to not lean on them too heavily and think that, oh, okay, they got an audit, everything's fine. So I always like to kind of get that balance set there.
One quick thing I'd give you guys for like a sniff test on an audit, you want to look at, are there any unused functions? Those usually get called out, and you kind of begs the question, like, why would they leave things in there that aren't meant to be used or aren't being used by the contract? You want to look at if they're using any oracles, stuff like, that could be kind of like a giveaway. You just want to make sure that the version of Solidity that they're deploying on is a contemporary version. It doesn't have to be the latest one, obviously, but just make sure that it's at least like an 8 or above for anything new. But yeah, those 3 things could give you kind of a sniff test.
Yeah, oracles are a big one. So LL uses one, and again, it's another one of those things for any of the governance models that you just want to understand what they are and where there's a problem, where there can be problems and where they're set up. So within Oracle, if they're using a centralized Oracle or one that has single points of failure, one, there's an obvious risk of failure there, right? There's a central point. The other is that you can use that point to manipulate whatever it is the Oracle function. So you always want to make sure that when there is oracles, that they're actually decentralized, that they're pulling from multiple price feeds, all these types of things to make sure that there's resiliency there. And the other is that oracles help with that off-chain data aggregation and making sure that smart contracts can be either one, access off-chain data, or so that they can access an aggregated source of data from on-chain. And so those things are important to have at least an understanding on, especially if you're not that familiar with the team or what the contract does overall. Then you need to be even more diligent about what those things can do. Larson, what's up, brother?
What's cracking? Question for you, dog. Before the validators with the other old system basically had to all sync up. If I remember right, before the 33 had to sync up before mainnet would ever go live. How's that work with this system? Will there be a heads up because of mainnet? Because so many validators have to basically get in line. How does that work with this system, or could it possibly just boom, it's just live, and then the validators can come on board?
Yeah, it's a good one. So with the old system, that 33 is basically who's in rotation. That's the term they use there. So the 33 that had the most delegation would be in rotation, and they would be the ones that were actually producing the blocks. Now with E2.0, there's none of that delegation. There is no ranking. Every validator is basically set out there, and it gets a little complicated how they break them down in the backside, but essentially every validator is now in rotation. So the actual core dev team will go through and they'll set up who knows how many, a pretty good number to make sure that the system is up and that the network is nice and rigid and stable and all those things. And then they'll also want to make sure that they give themselves cushion for people coming online, not maliciously, but usually accidentally with a bad validator. So when V2B came up, that was one of the problems they had is they set up, I believe it was 4 or 5 of the validators. And what happened is people were getting theirs registered and bringing on. A handful of people were trying to delegate and register their validators with no actual validator. So if you actually went and looked at the block explorer for a good length of time, you'd see it go 1, 2, 3, the block would drop. 1, 2, 3, the next block would drop, and then it would get to one of those registered validators that didn't actually have hardware, wasn't doing anything, and you'd see it like run 4, 5, 6, 7, and it would go through and finally time out. And because of the way, because there was no real incentive there's no economic value, and those guys weren't running real validators, it held up the rest of the chain. And that's why they had to basically restart V2B one time. So now with this one here, again, they'll set up a handful of those. They'll all be ready. They'll have enough validators essentially that the network is up and that everybody can come on and bring on their validators. And again, it gets more and more decentralized as everybody turns on. But they'll have that handful will be up. So you won't necessarily get a heads up. And they'll have enough up there that if, a handful of us come on as we're trying to get these things set up, like, Joseph was just, interested in it. So let's say that me, Joseph, and Trillion, we all get on here and we try to get ours going. And for whatever reason, we're having problems getting situated. It's our first time running these things. You don't want basically newer users to come on to have a chance of basically dropping the network early. So they'll have enough validators up to both make it stable and to give some space so that as people come on, they don't do anything to affect the network.
So is there a chance then that we could just go to mainnet and just skip the V2 or V3?
Not really. I mean, you can do whatever you want, right? So like there's no like governing rule saying there has to be one, but it really doesn't make any sense to do that. You wouldn't want to forego public testing. There's really no incentive to just drop it on everybody in that way. So you could, but it just doesn't really make any sense to. I would put the probability of that happening extreme, like so low that essentially it's zero, right? Like I'm not the one running the network and there's no rule saying you can't, so you don't want to say zero, but essentially zero. And actually Gamma just jumped up, man. I know you were just finishing off your live stream, man, and we're talking about the nodes. You want to jump in there?
Yeah, I heard. So the network can function with 30% of the nodes that are like registered not being online at all. So like what we're saying is the larger the amount of validators on the network, the less impact individual validators being offline will have, because 30% is a huge number. But if it's only 100 validators, then that means there has to be 70 online and then 30 that can be offline. But with Ethereum and also with Pulsechain, we're talking hundreds of thousands of validators, tens of thousands of servers can be running. So at any one time, the likelihood that 30% of the validators are going to be offline is very, very low, right? But when we first launch, the core team is going to be running like hundreds and hundreds of validators. You know what I mean? Like right now on testnet, they're running 256 validators. With like a certain amount of nodes, right? They're running like over like 256 validators. Maybe they'll probably for mainnet testnet V3, like when they do it public, maybe they increase that number so that when you and I run a validator, then ours has at least has less impact on that percentage that needs to be live for the network to continue to function and create blocks and finalize epochs.
I got you. Yeah, thanks for that. And then if I was interested in being a validator, can you set up the validator now on testnet? And then how does that work when mainnet goes live? Do you have to basically shut that down and then start up a whole new one, or is it just automatically kick over, or does that speed up the process if you do it now?
No, I mean basically testnet V3 would be you could run testnet v3, learn how to be a validator, how to deposit your stake, how it functions, and then that's fine. And then when mainnet comes out, then you would you would also you could basically would delete that database on your computer. You would just update your client with a different flag. You would like remove the Pulse chain testnet flag, or maybe just testnet. Usually, the double. It's like hash Pulse chain testnet is like a flag. You remove the flag, and you would now sync up the mainnet database for your beacon chain and also your Aragon or Geth client, which is like two different clients you're running, right? So you're running a beacon chain, and then you're running the other chain that has all the account balances and everything, but it's all on the same computer. Part of the setup process. You have to learn that, right? And you could do it on the same computer, but you'd have to delete the database. You'd update your you like do just basically just you'd have to git clone the or git pull or whatever the update your software on your computer, and then depending on if you're using Docker or if you're using whatever, make sure you have the latest version. Remove the testnet flag. Make sure you're syncing to a clean database, and then you're going to sync up on the network, which hopefully will only take like a day. But it could take a couple days maybe to get fully synced up. And then once it's fully synced up, then you register your validator through the process, and then you put those validator keys into your server, and now you're validating for the network. It's kind of a process that you have to learn how to do. There is 0% possibility that we're going straight to mainnet, because people need to learn how to be validators in testnet, so that when we go to mainnet, this 30% of validators that would be like offline and make it so the network couldn't finalize doesn't happen. Because like Walrus was talking about earlier, like on between it was either between V1 and V2 or V2 V2B, like on the transition between one of those two major testnet updates, there was only like 33 validators, right? But like 11 of the validators that were like in the top 33 when we launched that network were not in existence, like he was saying. So it made it so that the network couldn't finalize because there weren't enough validators that were like real, and it took like 4 days for the network to kick those off and then put other validators up in the top 33, and then we didn't have any problem at all. And we would like to avoid that problem when we go live, if at all possible, right?
Yeah, I got you. Yeah, that's good words of wisdom there. And then last question for you is off of how much that you see has been synced so far. How much time you think it'll be until V3?
So, I mean, I literally just did a YouTube video where I talked about the stages of Aragon with a chart based on the Aragons, like how long does it take for each step, kind of a thing. Like, look at my Twitter. You can watch a video about it. But I'll tell you the short and sweet of it is stage 4, which we're on stage 7, takes the longest. It looks like we're like indexing this actual full node. It looks like we're 70, 80% at least complete on it, because it was like 16 stages, and the stage 5 through stage 16 is just indexing the different components of the database, which is just CPU intensive and putting a lot of stuff in the memory. So we're then I don't know how long they even have that takes, because what I've seen says that it takes like 65 hours to sync up a Aragon full node, but obviously that's not correct, because this node's been syncing for 9 days. And we're like maybe 70 or 80% done, right? So, I mean, it could be another week, another couple weeks for it to fully sync up. This is an archive node. This is like the top tier full node. And so most users, like you running a full node, are not going to run an archive node. You're going to run a full node, which takes like a day with the basic information. So you're talking the first like 4 steps, and then you're doing you're downloading the first 4 steps, which takes like maybe a day, and then you're stopping there, and then you're going. This is doing like all these extra steps to build out this huge database. It's like 3, 4, 5 terabytes of data for the Explorer to function correctly. So don't worry, you're not going to have to wait a week and a half or 2 weeks or whatever to sync up your full node. It won't take that long. This is a special full node that's an archive node for a special purpose that most people will not be running. I just want to make that clear.
Sweet, man. Thanks.
The only thing is, if you care about keeping the testnet node, or you might just want a second hard drive so you could do all that stuff and not lose it, not have to resync the testnet. But that's just if you want to keep that.
Yeah, I mean, you can also do a thing where you could roll back your database to a block height and then resync up with the new binary. And then I couldn't ever get that to work. on testnets before. I tried, and then for whatever reason, it wasn't working for me. So I would literally would end up just syncing from Genesis, and I did it like a dozen times. But that's testnet, right? On mainnet, it is not normally that difficult, and I know what I'm doing. And it was like beating my head against the wall, thinking like V2, I think. So we've come a long way. It shouldn't be hardly any problem at all for you guys.
Hey, damn it, did they change the chain ID between the testnet versions?
No, I was told they may change the chain ID for mainnet and V3, but I have not gotten confirmation of that number. What's been published is 941, 942, 943, 369 for mainnet. So until Richard tells us that the chain ID changed, or unless they update it in chain list org, right? Then it's what it is. But they are thinking about changing the chain IDs. The Brent did say that in one of the chats.
Nice. Appreciate all the insight as always, Gamma. Scott, what's up, brother?
What's going on? Hey, thanks for hosting the space, and thanks to everybody sharing all the knowledge and information. It's always changing. So I wasn't into crypto until, I don't know, a couple of years ago, like pandemic or whatever, and knew nothing. But I made it to you guys just in time for the Pulsesac. But I sacked pretty much all gains for Pulsex day one liquid loans. I was in a dog coin at all-time high a month after Hex. I missed the whole Hex run up, unfortunately. But so like what Nas was saying, I probably sacked twice as much for Pulsex as I did for Pulse. Like my whole strategy with what Power City is doing now definitely changed. Still haven't figured it out yet. But I was thinking when you were talking about audits and code, so like Pulsechain's forking Ethereum, which is battle tested, and Liquid Loans is forking Liquidity, which is battle tested also. But then you have Power City, which they're doing the Liquidity fork, but then they also have the accelerator and everything with the auto compounding, and I don't know if it's AI or what, but it's pretty cool. But like, yeah, I had to just sack a little bit there too, because I'm all about the passive income and never selling. But isn't it kind of like compounding risk? So like we're betting on crypto, and then we're betting on DeFi, and then we're betting on Pulse Chain to go well, and then you got to have liquid loans to go well, and then like another layer of risk with like the accelerator and stuff. I was just wondering what your thoughts are about that, and if it's smart to real. I mean, I was already planning on kind of delegating percentages of my bags here and there, and always having stuff set aside, different wallets and stuff. But would you think the risk level gets too high the further down that rabbit hole we go?
Yeah, I mean, that's actually like a pretty difficult question in some ways. So part of it is with crypto is we can actually see what these things are. So if you put your money in a bank, we can see that there's a bank, but we have no idea what the externalities are there, right? At least in crypto, we can see what they are. So even if you're operating on, say, ETH and doing something as simple as Hex, so Hex, again, for a smart contract, is probably about as low risk as we can expect at this point. But ETH changes. You have, the Infura nodes, all the things you're hearing about with Gamma, wallets. You still have all these layers of things you're interacting with. There's just a certain level of things that we just have a comfort with. So when it comes to some of the crypto versus legacy stuff, a lot of times we just at least know, or at least have an idea of what the risks are with crypto. When it comes to all the way down with doing like the custom front ends and things like that, you're going to always add some risk. But again, sometimes that stuff's so hard to quantify because like the answer is like yes, right? Like anytime there's any extra lines of code, there's more risk. And you just basically want to allocate your bag between those things. So there's certain things where you may want to say, hey, I want 2 to 5%, or maybe you're very, very risk on. You say, I want 50% of my bag in something that can, go up 1,000 plus X, that type of gem. But in general, crypto tends to be pretty high leverage in the first place. So you can diversify between these different things. And it's always good to have some level of diversity there. But it depends on what you're diversifying from, right? So if you use multiple front ends, then now you're diversifying from the front end. But again, if the collateral is the same, then you don't have diversity from the collateral, right? And if you're in 5 different Pulse Chain products, and Pulse chain doesn't work. Well, all those things don't work, right? So some of the things about trying to diversify and some of those like risk management, risk profiles is you want to look through and assign some level of risk to yourself to these things. So there's a lot of things that I'm not that concerned about with some of these things because I'm very, very close with them and I have a knowledge that makes me feel close, right? So me and Gamma the other day, we went through and we went down some rabbit hole stuff about like 51% attacks. Now, again, I don't write code, but I have just enough understanding to be able to understand some of the smart guys. And when I go through some of those things with Gamma, his knowledge around these other things, I'm able to get a certain level of comfort. But if you don't have that knowledge and if you don't get a chance to sit down and talk to guys like Gamma, you have to look at that as more of an unknown risk. So the deeper you go down on some of these things and the like I said, kind of those levels you add, you are always going to add some risk, but it's usually not as much as you think. You just want to look at those things individually, right? So, if you're comfortable with Pulse, okay, great. So now there's Pulse, there's the collateral. When it comes to the front ends and things like that, like, yeah, you want to look at those. And even those risks, there's different types of it. Like, is there a risk that this just doesn't go up as much as I think? Is there a risk that it doesn't pull out as much fees, or maybe a strategy fails, or this thing doesn't work? That's different than say, hey, this thing goes bust and goes to zero, like an admin key risk or like bridge exploit, things like that. So again, that's a pretty long one, man. We could talk about probably risk profiles for the next 2 hours, but I think to kind of answer specifically, I don't think that using any of those products is too much. You just want to make sure that you're going through all those things and making sure that what you have a decent level of comfort with, and that when you spread those things out, that you're actually spreading them out, not just spreading them out to spread them out, but spreading them out for whatever it is that you're concerned with, right? So if you say your issue is with our coding, well, then if you use the Power City front end, that doesn't matter if ours stuff is what breaks, right? So you didn't diversify from our stuff working. So you want to make sure that you go through when you look at all these things that you're actually, if you're trying to diversify for again, different types of reasons, that you make sure that what it is you're separating from actually separates, right? So if the idea is some level of censorship resistance from like the US, well, if the US just says, hey, bans crypto, well, then it doesn't matter how many crypto projects you're in, they're all banned, right? So you just want to make sure that when you're going through and doing those things, that again, that you're actually taking different sides of whatever the risk is and not just saying, well, I'm in 5 projects, that's diversified, right?
Real quick, there's this trend that whatever the coin ICO is at, usually it launches 3 times higher. So you have to keep that in mind, and just also keep in mind the utility of these things too. What are people gonna? Because you need that buy side, you need that demand in order to keep the price rising, which is what you want to do. So just keep in mind that you're probably already going to start off ahead, and if you want to hedge your risk that way. But of course, some projects will be very useful right off the bat, right from launch, and some will sort of mature into being a more valuable into a better value proposition for the users. So if anything, by diversifying, you are hedging your risk to some extent. Just keep in mind the difference between your ICO price. I'm just calling it that. I know it's not an ICO, and what it actually launches at, and just work from there.
Yeah, thanks. That actually all made sense. I've onboarded tons of people, friends and family, and when I talk to them, they look at me like I'm speaking Mandarin Chinese, and then I come back in here and usually feel stupid again. Yeah, no, I'm stoked for all this, and fucking thanks again. And I'm a scared little bitch with huge balls. Let's fucking go.
So the last thing I was going to chime in there is also I think that crypto can make us greedy in an awkward way. Part of the reason that I'm always like, hey, when I say like I don't care about price, I don't talk about price. Price isn't what I'm chasing. It's not because I don't want to make money, right? Like, I'm a capitalist, guys. I'm going to take profit. There, I said it, right? Like that's no scary thing for me. Like, I'm not pretending to be SBF and then I'm here to change the world and all those things. Like, no, like I do a lot of positive things for the community because I like the community. I like doing net positive things. I like coaching. All that stuff is true. But like, I do things to make money, right? Like I have a job. Like I work for LL. I get paid to do these things, right? But the reason that I have that stance is, well, I guess it's really a couple of things, but the two big ones is crypto that doesn't break, that does something impactful, and utility is kind of a weird one, but just does something impactful, right? Number going up in a reasonable sense, like is impactful enough. But crypto that does something impactful it just goes up a lot, and it goes up way more than anything else that you can engage with, right? So if the idea is I can take, like for me personally, if you say, hey, I can guarantee you a 15x, or you can take a level of risk for 20, I'm pretty much going to take 15. I'm up 15x. Sometimes I think we get jaded from seeing the Godwell's numbers, or looking and saying, well, Bitcoin went up 6,000,000% or whatever it is, right? All these things that we can get away from, just like how absolutely stark raving insane it is to get 6x on your money. If you get 6x on your money in a year in crypto, no one on crypto Twitter is going to pat you on the back and tell you how smart you are and cheer. But that is absolutely insane returns. If you're someone who $5,000 is a decent amount of money for you, if you turn that into 30 grand at the end of the year, you should be pretty damn ecstatic about that. So some of these things with risk and when it comes to price is, it's not that number go is important. It's not that a lot of us aren't trying to make money, but I think that fixation on it causes people to chase gains when they would have already had life-changing in some capacity gains from just doing the safer, more sound, more reserved, taking the slower side. Again, like Trillian's saying, to be slow, to realize these things are going to go up, whatever capacity is, to just doing the more sound logic thing and just saying, hey, I'm okay with a 15x. I'll take 50 instead of 70x, whatever. Like, these gains are already so high that you can afford to be more conservative, to be safer, to engage with communities that you enjoy more. Again, whatever it is that resonates and matters, you can afford to do those because these things already go up so much when they work anyway. So I always like to push those things that, if you got in Hex, day 1 or 24, whatever that bottom one is, yeah, you got some, these crazy thousands of X's. But if you got in, I don't know, like 2.5 years ago, whatever the numbers are now, and you only caught 100x, like if we quit thinking about crypto Twitter and we just take a deep breath to ourselves and we think, hey, is 100x what I invested worthwhile, life-changing, incredible returns that I couldn't get in any other way? Everyone will say yes. But if you said, hey, I'm just happy with 100x, people would actually think that you're fighting a project. Like, that's how warped some of that view can be on price. So that's the part of the reason that I always push on some of those price things, is that if you're focused on price and trying to extract value, you're only going to be around people who are focused on price and trying to extract value. And if you just try to invite community and be involved in things that are productive, participate whatever way you like, do things that are market fit, they're already going to go up. Like, it's crypto, they're already going to go up a bunch. So that's kind of my soapbox right on that.
I might just add on to that as well. Just to what Scott was asking. Another aspect that I always, well, personally myself, look at is not just the attack surface on the protocol itself, but also who's behind that protocol. Who are the team building it? Can I trust them or not? And ultimately, my personal stance has been that the people that I haven't just sacrificed or invested in, these projects just to make money, in the hope that it'll make money, but also I've done it because I believe in the people that are launching these projects. I believe that they are people of integrity and they will, look out for my best interest and, not do me over.
100%. Trillian, did you want to chime in there?
I was just gonna add, like, in traditional finance, if you're a broker and you make 18% for your year, you're like a superhero. So if that really puts things in a perspective, and part of it is this, that maybe not everything is a slam dunk, but the few winners that you do get, they're gonna win so much that it's not even gonna matter. And the thing I keep in mind is that, guys, this is never gonna happen again. Like, all of this pent up delayed gratification that we've had for the past year and a half, that's not going to happen again. So if anything, it's for the rarity of this moment that this is how you get those outsized opportunities, and they don't happen very often, and this one's going to happen once. So be smart, but also understand that this is very rare.
Yeah, Larson, I see your hands up, man. Give me just 1 second. Let me double check with Degen. He's been up here for a while. He hadn't said anything. Degen, did you have a question or comment, brother? Easy enough. Larson, go ahead, man. Run it back.
Okay, a little bit off subject question, but if one wants to pull up all his transaction history for like taxes and stuff, from like his centralized account and like from the wallets it went to, what's the best way to do that?
So from a centralized wallet, they all have different interfaces or from centralized exchanges that you can ask for. And if you're looking at DeFi applications or like what you've done with your 0x address, Coinly with a K, they do a good job of giving you some like taxable information and at least helping you get your documentation together.
Perfect. That's the one I remember. Thanks.
Absolutely. Joseph, what's up, brother?
Hey, I had a bridge question. So I noticed that there's going to be a bridge established for Pulsechain to Ethereum. I wanted to know if you can explain that bridge. Is there any admin keys associated with that bridge? How's it really secure? I've been looking at something called Everrise, which they do have an admin key, but they actually seem to protect the bridge a lot better than I've seen. So what's going to be different about our bridge, or is there any concerns about the bridge?
Bridges are hard. They are one of the most difficult things in crypto for two reasons. One is you're trying to communicate between two databases that fundamentally cannot talk to each other. That's difficult. The other is that if you're using a bridge like what most of us are used to seeing, which is like a lock and mint, or again, like the one like Pulse Ramp. The other issue is that whatever it is you lock. So if you were bridging from Pulse, it's going to lock in that smart contract and then issue you a wrapped token on Ethereum, or the other way around, right? So the value that gets wrapped is sitting in a smart contract, and anywhere where there's a lot of money, things are going to try to attack it, right? So a couple of examples to make this make sense, and then I'll answer your question directly as well, Joseph. Whenever if you go and get the new Madden game, within reason, people don't go get the Madden game to break it. They got Madden because they wanted to play Madden, right? And I don't want your Madden not to play, because then I have no one to play with. And again, unless you want to get into like corporate espionage, in general, what I'm getting at is that's a piece of software that everybody wants to work because it working is beneficial for everyone, right? That's very different in blockchain because these things hold value. Now everybody wants to break everything. Like that is the absolute goal of some of these guys, and because there's so much economic incentive to do so. So the first issue is there's just value. People want to break stuff. The other is that bridges particularly have a lot of money. So if I go and like I'm trying to give like a kind of off the scale one. Say I go and basically manipulate an RPC to where Nas and Tangent can't get on from their wallet onto the chain. Realistically, like how much advantage do I have there? Like maybe Nas and Tangent go on a crypto tirade, maybe I get to troll them, but like it doesn't really bring me much value, right? Like who cares? So there are certain reasons why teams or people might do that, but there's not a lot of incentive. But a bridge can hold tens or hundreds of millions of dollars, and I have every incentive in the world, and I'll do almost anything to come break this thing because the payoff is so large, right? Part of the reason that we can look at security in something like Bitcoin is because if you look at Satoshi's wallets, if you could actually go hack a Bitcoin wallet, well, there's a couple $1 billion bounty sitting there. Now, again, there's obviously a lot of like downtrend things that would happen, but there you go. The money's right there. If you can go crack and get into a Bitcoin wallet without having the seed phrase, it's right there. Go break into it. There's a ton of money. So that's why you see the two things that we see the most get hacked are bridges and exchanges. That's because that's where all the money is. That's why you see fraud at those levels. And in my semi-technical, semi-conspiratory opinion, I think a lot of the bridge hacks that we see are at least somewhat or all inside jobs on some of those things. Not all of them. I'm not pointing at any specific one. I'm just saying far too often, if you tell people that they can design something with some level of exposure and that they might have a chance to come attack it later for hundreds of millions of dollars, sometimes people might be greedy there. So that's the reason that bridges are so difficult. Then particularly the bridge that they're using is Pulseramp. It's a fork of XDAI or Omni Bridge. So you can do a look on them. They do have an admin key. Every bridge that is a like lock and mint style of bridge does have an admin key at this point to some degree. Now it is not held in a singular contract where RH or whoever whatever dev is running the bridge can just sit there with a button and just like say, all right, Joseph sent me 100, I'll mint him, or I'm going to take his money. It's not that type of an admin key where it has like this singular point where someone is just clicking in the funds. It's not an Excel sheet someone's filling out. It's aggregated over another type of validator network. I believe they've tried to keep some of that quiet. I don't know what all the documentation is. I've spoken to a few people on that team, so I try to be careful and wait for the official documentation on that. And there's a few things on why you'd want those things held quietly. Is one, that people who hold validators, you want them to have some level of privacy because again, they're holding part of those keys. So it does have an admin key. It just functions differently than we would think of as an admin key with a traditional smart contract. It does have a level of delegation there, or federation, depending on, again, the terminology. It has been around for a long time. It has a ton of forks. It's one of the most audited and tried and true bridges. And so while it's in some ways sort of old tech, it's very tried and true software that's done very, very well. So I guess the short answer on as far as concerns, you should always have concern with bridges. You should always try to minimize your exposure to those things because you can, right? And any point of failure is a point of failure, and you always want to be very cognizant of things where if they fail, it means your tokens go to zero, right? So it's similar to the risk that we talk about with exchanges. There's a lot of risk in crypto, but I think he stepped down, but Scott brought up some of these risks of like smart contracts. Well, the risk of a centralized exchange is that there's like five different things that can go wrong, and if any of them go wrong, I lose all my money. And so that's why the other side of why bridges are particularly risky. I have a good level of confidence with XDAI. It's been a little while. That's something that I need to go do to get ready, is to go back over a lot of that documentation. It's been a long time since I've looked at it. It's not a bridge I use in other places. So we'll want to go through all those things. I can try to get more in depth. I can probably just do another space on at one point to at least get out as much of that information as possible. But again, this is a very tried and true forked, very sound code bridge.
Doesn't Power City have a solution to this? I thought I saw a quick little snippet about it's some like, I don't know. There's a solution to this, I thought. You probably know.
Yeah, so they have a multi-chain bridge. They're going to bring over multi-chain. So multi-chain functions differently, and it still has it's set up differently in the code, but it still has similar risks that we're talking about, where the bridge basically has to communicate. And there's just, again, there is no actual trustless way 100% to do this yet. The difference on what they're doing versus the Pulse ramp is in some of the ways that for the network. So for certain users, if you're comfortable with the code and everything looks great and all those things, there is less risk in some ways with the multi-chain. But where you need something like the Pulse ramp at this point is because if, let's say that you're on Pulse chain, right, and you have $1,000 of value, and I have $1,000 of value on Ethereum, right, or let me phrase. Okay, so you have $1,000 on Ethereum, and you want to go on to Pulse chain. If you use something like multi-chain, where there's this cross-chain dexes swap, basically, so it's basically a swap in the dexes is how it actually functions on each end. Then that $1,000 of value basically just swapped. It didn't change. Like when you make that swap, $1,000 went to Pulse chain, but $1,000 basically comes off as well. It doesn't move that value on chain, so the value on chain hasn't gone up. But if you lock and mint, then you basically raise the value that's on that chain. So for starting like all these liquidity pools and this sort of exodus value that you want to happen early on in the chain, that has to happen with those old style of bridges at this point, or a centralized exchange. So if you use a cross-chain swap, it's a swap, whereas, and we still can refer to that as a bridge sometimes, but an actual bridge that's like lock and mint is actually moving that value over. So I usually use the poker chip analogy. If there's a table and there's a bunch of players here playing poker, and you swap $100 with one of the players for $100 in poker chips, he has $100, now you have $100 in chips. There's the same amount of poker chips on the table, right? The value on the table has not gone up. But if I go over to the cage and I give them $100 and they mint me another 100 poker chips, $100 worth of poker chips, and I go to the table, now that table has an extra $100 in chips. So you need the original style bridge to actually bring value on chain, and then users can use whichever risk profile they prefer to actually swap value around. Hopefully that's clear. This is kind of a tricky topic.
Oh yeah, that makes sense. I think it's similar to like Stargate, I believe, but yeah, that makes sense.
Yeah, the Greg, the guy that RH just did that interview with, I argued with this guy for like 2.5 hours. So I'm glad that you get it, because this guy apparently builds bridges and I couldn't get him to understand. So Larson, you're brilliant, man. You're at least a basic level dev now.
Well, we're going to do our bridge independently, Walrus. Don't worry about that pricing. It's all good. Take my word for it.
Yeah, it's all a curve, right?
It's all a curve. The price is a curve. The bonding curve's a curve. Everything is a curve. You don't even need liquidity.
Yeah, I'm actually teasing that guy only because he might. I don't know how to say this without sounding as rude as I mean it to be. That guy actually is really smart. And I mean this with a lot of respect, because if I didn't think he was smart, I wouldn't just make fun of the guy. I'm actually making fun of him because it's clear that guy has a lot of education and thoughts, and it's just weird to me that he is so off and wrong about some of these things. And I don't usually say that, but that guy is just flat wrong about so many things, but he has a ton of knowledge. He's an interesting character, honestly. Like the time I've got the chance to talk to him, we're not confrontational, like there was an issue, but we were just on different sides of a debate, and that's all we really discussed. I really wouldn't mind talking to the guy and getting a feel for like, hey man, how'd you get to be this way? Like, what do you have going on? Like what his actual background is technically, because he's an interesting person, right? Like to have that different of an opinion.
I think he says a lot of things that people just want to hear without really bearing out any of those ideas and any practical purpose. Look, it's really good to want to create things things, but we also have to look at what's worked in the past and what doesn't work in the past, and the heuristics are kind of tricky. So I hope that's a lot of the benefit that I think people get from coming to these rooms is just to hear that experienced approach. There's a million ways to solve these different problems, but we know that some of them don't work. So to keep beating our head against the wall just because it's morally, it's a moral concept of right and wrong, that's not going to take us forward. So yeah, I'd love to, if you could bring him in for a debate. I DM'd him too, but man, I'd love to get that guy for like 30 minutes.
Yeah, and that's something that, again, for those that don't know, a few of these guys that have kind of known me my whole time in the community, or at least the vast majority. Like, I've never really done content. I have zero social media outside of like Walrus stuff. This isn't like making content and YouTube. I've never done any of those until I was doing them for the community. So one thing that I've noticed that I hadn't really put two and two together on before is when I've done some of these spaces or prepped when I knew there was a topic for a stream, it is infinitely different when I'm either only going to pitch about a certain topic and I have a lot of time to prep, or even especially more if I'm not going to be challenged, or especially if I think I could talk at a level where they couldn't really respond. So like Gamma, for example, Gamma has an insanely high knowledge on some of this node operation, and I get it at like a basic level, so that if basically what happens is I know enough to like find certain problems, and then I come ask a guy like Gamma. But for example, if me and Gamma were talking and I was like, hey, Gamma, what about X, Y, Z? Gamma it'd be very easy for him to speak over my head and not be challenged. And so in some of those ways, when people are prepped or they're on a particular topic or they're around a few people who can't challenge them, they can sound brilliant. And then what happens is you get into more of a space, not even necessarily a debate necessarily, but just a space where there's open dialogue and you have to go a little farther or you get past your talking points. And it quickly exposes like who has a very like well thought out knowledge versus who's, again, I don't want to sound this tacky, but like reading from a script to some degree, right? And I try to make that stuff clear when, hey guys, like I think I've probably told I'm sure I've told Joseph and Nas probably, where I'm like, hey, I know the answer because I know the wording, but I don't actually understand what I'm about to tell you. You guys will have to go verify it on your own. And that happens a lot. And I try to do a good job of explaining that stuff. Like, hey, there's times I have a conversation with Gamma or one of the devs on the team where when someone asks me a question, like I can respond with the same words the dev told me, but I don't really know what I'm saying. And I try to make that stuff clear. And it is interesting, man. In this space here, there's such an overlap between tech, crypto, the history of all these things, and finance that you can just quickly get far above your pay grade.
Well, that's what makes you special, Warriors. Not a lot of people are willing to admit, hey, I'm going to admit that this isn't my area of expertise, but I'm going to try to help you out to the best of my ability. I appreciate that about you because I love to come in and pick people's brains because I'm never the smartest guy in the room, and I'm still learning. So I just enjoy learning as I walk this path in crypto.
Yeah, we got
Myself as well.
so we got Hex pumping. I don't know why or what is going on, but it looks like Jerome Powell just started speaking. ETH is taking a shit after posting one of the weirdest candles I've seen in a while. And I don't know. Let's keep it going though. This is working.
There we go, man. Yeah, that's one of the things in crypto. I feel like for me, I had this experience in a lot of different fields. The most valuable thing I think you can run into is someone who's a knowledgeable person who's willing to give that information, but honestly has no problem saying, hey, I just don't know. Because if they won't say, I don't know, then you just have to have a very different level of trust and sort of confirmation in the things they talk about. Like people just have to be willing to say that, like, especially again in crypto, there's too much here, man. Like I guarantee you there's whole conversations Tangi can have that no one else on the stage will understand. I 100% guarantee, Joseph, I've heard you talk about some of your legacy businesses that you can have conversations none of us will understand. Trillion and Gamma, absolutely, for sure. I see like Harvey and Bullish. I've heard both of those guys speak. John Harvey, if you guys can get a chance to some of the AI spaces, that man's brilliant. Bullish, I feel like weirdly, Bullish might be good at like pickleball. He might be like a pro level backgammon player. I feel like there's almost nothing you bring up that Bullish doesn't somehow have some kind of a background in it. He's a very jack of all trades. So there's just too much going on in the world, especially if you want to do these things at a really high level, that you just have to appreciate some brilliance and have some humility on these discussions. Let's see, guys. We'll probably keep it open for like another 25 minutes or so. Space is pretty solid. There's a lot of people up here. So if anyone has questions, again, they can be simple, big game theory stuff. We want to get out in the weeds. people want to try to FUD us out a little bit. I do have one other thing I was going to bring up on regulation, but I'll try to keep the space open for probably about another 25 minutes. Again, everyone is more than welcome. Doesn't matter what ticker symbol, doesn't matter what's going on. If people have questions or comments, or even if they just want to disagree, they're more than welcome to come up. Frosty, I was going to bring up a little quick bit on regulation. Did you want to jump in first?
No, man, do your thing. I just got a question regarding. I was interested in that bridge to other currencies. If you could elaborate more on that, or if how that's going.
Yeah. So particularly for yourself, this is one of those things. Again, whenever in these spaces, especially like they're sort of powered by liquid loans, but again, they're very, very community inspired. So when we talk about other projects, one thing is like that's not necessarily an endorsement. So we talk about stuff that we think is cool. Make sure that you still go vet those things. Like I'll be very clear when I'm like, hey, this is one that we trust. Everything's okay here, which is almost never in crypto. But if we talk about stuff like, guys, please take some level of responsibility. Like, it doesn't matter if you say, hey, well, Walrus told me. That's still not going to put the money back in your wallet. Always double check on these things. And we'll be very clear when we're endorsing something and saying, hey, this thing is safe to go do. But so for those that don't know, Frosty's big in El Salvador, a lot of the Latin American places where he's very, very much involved in making these things like actually peer-to-peer and function as currencies. So there's two things that would probably be interesting. One is Pulse LN. That's a project where they have a swap between the Lightning Network and Pulse, which I think is incredible. And I really hope that those guys' projects ends up being successful and working well. One, it's always nice to have another tool for people to onboard money into crypto. The other is that I brought up a few times in that in traditional finance, people use the dollar for a lot of reasons. One of them is that it's just fungible, and pretty much everyone across the world will take dollars within reason, right? It's a very, very fungible asset. Bitcoin is the one that's the most similar in crypto. So when we come to like retailer adoption and some of these things, if somebody wants to be able to take on some form of crypto, it can be very hard for mom and pop shop, any of these things, a standard user to do all the things that we do, right? Like we're sitting in here on a Wednesday talking about bridges and risk profiles and crossing, like this stuff is difficult, right? Like there's a lot going on. So when it comes to actually getting these things adopted and making these things useful, it's a lot simpler for most places to say, hey, you guys figure out Bitcoin, figure out how to open up a Bitcoin wallet, get on Lightning Network, the fees are low. We'll figure out how to get to you. And that's where I can see Pulse LN being useful for especially the people in this room. We can use Pulse LN as a way of getting to the Lightning Network and basically piggybacking off all the infrastructure that Bitcoin has. So we can start to use some of those things is to quickly move that value into ways that are fungible. So again, it's very difficult to get people to understand all the crypto, but it's not that hard to basically say, hey, here's a Bitcoin wallet. When these digits show up, you're good. So Pulse LN, and then the other one we brought up earlier was multi-chain. There'll be some other swaps that come, but that's from the Power City team. They have that partnership there. We don't have this on chain or anything yet, but it should be coming soon. I think that if I remember correctly, they may be putting something up on V3, but if not, they'll obviously have it, audited and looked over. I know all those guys over there, so it'll be clean by the time they're ready to go on mainnet. But that would give you some more of those swapping options, including things like Bitcoin.
Yeah, man. Thanks for that input. It's valuable input. I can see that being a very valuable proposition if it can get work well, especially to fungible, tangible assets.
Yeah, I agree. And these things all have like useful profiles. So there's the blockchain trilemma: security, scalability, and censorship resistance.
For speed.
Right. So when we look at some of these things, how we would think people are willing to use things like layer 2s or lightning networks or any of these things to basically make these things function in a very, very fast way. But within some degree, we're taking some level of loss on security, right? To some degree, whether it's, some of the actual channels that work with Lightning Network or with L2s having certain redundancies back onto Ethereum. There's some level of trade-off there. But again, if we're wanting to move, say, I use the same example with security, right? So if we're wanting to move $40-50 around and I'm out here buying a coconut water, or I'm wanting to buy dinner or any of these things as we're rolling around, okay, well then I'm probably willing to take some risk of whatever the difference in risk is between Bitcoin Core and the Lightning Network so that I can actually use this thing, because at some point Bitcoin's really slow and it takes forever and I can't really use this thing for like just day-to-day commerce the same way I could a Lightning Network. Now, at some point, maybe I've got $100 million, and it's like, okay, well, maybe I'm not willing to make that trade-off. So maybe you keep the majority of those funds in either ETH or Bitcoin or some of these things where, yes, it doesn't have the same level of scalability, but I'm not asking for scalability. I want to make sure that my money stays exactly where it is and never has risk, right? So those are some of these places that we can do these trade-offs. So piggybacking off that infrastructure and utilizing the best tool for the job makes a lot of sense. So I really hope that this is one of those things. I've said this for a long time. Like if Bitcoin maxis would stop saying stupid things about Bitcoin, we would stop saying mean things about it. And I do think that we should very much be like, look, like whatever it is we think about Bitcoin, your feelings don't really matter. Bitcoin is accepted in more places. Bitcoin is the one that's most like accepted in legacy markets, and Lightning Network does work really well as a currency at this point, and it's what's being adopted. So you can tell me how you feel, or we could actually try to work with the infrastructure we have and try to win. So again, I would love to live in a world where everybody has a 0x address and we're QR coding between people, but that's just not where we are right now. So we can always push toward those better places now. Like we can, by connecting with some of these things, we can make this stuff better right now, and those need to be explored as well. Like sometimes perfect and good enough can be enemies. Frosty, we got a couple of the speakers here. I'm going to jump to them. Did you want to chime in one more time on that?
No, my friend, go ahead. You can knock me down if you need more space.
No, more than happy. Hex Live, what's up, brother?
Hey, what's up, Walrus? Thanks for hosting this space. I love this. You know, I'm deep in the dev game every day, so I kind of have my head in the sand a lot of places, and I use these spaces to learn about the ecosystem. That's one thing, you know, I don't know the ecosystem, you know, very well, like definitely not to the guys that are talking in here's extent at all. And I'm just wondering, should I look at like, Pulse Hot List has a lot of the projects, and I'm just wondering an easy way, like I can't be in the telegrams. I'm not even on Twitter a lot other than but like is there anything better than Pulse Hot List just to get a landscape? Like I wish someone drew a big crazy chart of all these projects with crazy arrows going everywhere. I would love that. But is there anything like that? Like, because like Pulse Hot List will give you all the different projects and you could try to go through that. But did anyone create kind of like a map of the Pulse chain landscape or the anticipated landscape or anything like that to kind of get the ecosystem fast without doing like all the hard work you guys are doing?
Yeah, it's called the Red Squirrel strategy.
Yeah, Red Squirrel. If you haven't seen any of his stuff, man, you should follow him on Twitter. He's in the Telegrams a lot. He does a lot of very exotic kind of infographics. But I know what you're getting at, and we definitely should do that. That's something I should try to put on the map, because we're gonna have a whole group of things once V3 drops. Like we'll have the oh my God, V3's here, hair on fire moment. And then after a couple weeks, once people are situated, the first kind of things, is everyone with protocols will look at the new contract copies, explain to everybody, hey, here's how you go get to all our V3 versions of stuff. So once everyone kind of gets through that first 2-week kind of period, I'm sure Gamma will be absolutely annoyed as hell at the entire community for blowing them up on getting their validators and stuff running. Once we kind of get through that phase, one of my next big projects will be like getting out clear documentation for everybody on V3 and doing something where it's, stable coins, lending, meme, and just kind of like one of those, big grouping identifiers and list some of those projects out would probably be helpful for a lot of people. I agree. Yeah, we'll definitely put that on the list. There's a bunch of security things and safety around launching around mainnet where we got to tell everybody like another 400 times. But I want to put out something that all the other, the kind of like major community players agree with, because something that was very, very helpful in the Pulse Chain Telegram was when it came to security specifically, you said it how Papa B said it. I don't care what your opinion was. No one's lost money doing what Papa B does. Papa B's the man. He dedicates the most time to these things. Inside of the room, we go, Papa B's the end of the line when it comes to security. And one, Papa B's a brilliant guy. It's very, very helpful. The other is that there's just a layer of congruence. And if people just hear the exact same thing said over and over and over and over, then they tend to hear it. And it makes those things easier. So on some of the security, like, hey, where do you get your links? Don't click this stuff. No, there's no Hedron help support. No, I know that Thai girl looks beautiful. She's probably not going to help you earn more money. She's probably not really a trader. Please don't follow her and send her your seed phrases, all those kinds of things. But we want to make sure that there's like one message in one language so that everybody just hears it over and over. There's never confusion, and everybody just gets so sick of hearing it that they actually learn this stuff. So once V3 kind of calms down, we'll transition, and I'll make sure we add that to the list of kind of having at least a 10,000 foot view ecosystem map. I think that makes a lot of sense.
Yeah, that's going to be so important. The security, once Pulse Chain releases, there's going to be scams everywhere. You're going to have scam tokens in your wallet. It's going to be crazy. I mean, gas is going to be like nothing. So there's going to be contracts, tokens, founders that you haven't heard of, getting projects. It's going to be nuts. Hopefully everyone understands that. I wonder if the
Move
Pulse Chain
slowly.
police has a Twitter. Yeah, I move slowly.
As in,
I
it's
don't
it's
trust
very
anyone,
rare. It's
I don't
incredibly
trust a
rare.
lot.
It is incredibly rare that something goes wrong in blockchain because you didn't act. It's more likely to go wrong because you act quickly without thinking or in a panic. It's the same in legacy scams as well. Like when your bank contacts you and says, you have to do this shit, otherwise you're going to lose all your money in 2 hours. It's people who act quickly and emotionally, like they're not thinking straight. So in blockchain, if you're unsure, don't do anything. Like slow down.
Yeah, I don't even like claiming the tokens. Like I'm very slow to all those free claims, but when Pulse Chain releases, bull market happens, you think people are in their feelings now. They're going to be there in their feelings just on the positive side when Pulse Chain releases. I'm wondering, yeah, maybe I'll just pay attention more to Pulse Chain police a little bit more. And, because I want to do stuff in the ecosystem. I do this for fun too. It's not just like all work. So, I mean, I got into this ecosystem for fun and, to make money for sure. And now it's like my life now because that's what I do. But people are going to be going nuts. And like all this talk now is going to be out the window, like maybe not out the window, but a lot of people that are new, that new money flowing in, they're going to be new to crypto. And it's tough. Crypto's not, you're gonna break out your ledger, your Trezor and start clicking that button all day, or you just gonna open up, a hot MetaMask wallet and just go to town. A lot of people are going to be doing the latter with, probably irresponsibly large amounts of their like net bag. So yeah, maybe Papa B will start. I guess I don't watch a lot of streams now, but maybe Papa B does streams on this. I got a Trezor because Papa B, I was deep in the ledger game forever, but now I like Trezor more just because it's a little easier for me to use. But yeah, it's going to be exciting. Security is going to be so important. Not harnessing people's IP addresses on all these various, apps that we're going to use. It's kind of hard for the app developers to think about all these things if you don't have a team. And all of this is going to be very apparent once the mania sets in.
So yeah, 100%. And to both these guys' points, one, I'll get with Famous and a few of the guys who've done such a good job running all the Twitter spaces, but we'll likely have at least two, community official, not like RH official, but community official Twitter spaces, along with the Pulse Chain and Pulsex Telegram rooms all open. And again, I talked to a few of the OGs from the Telegram room, and I know all the Twitter space guys do the same. We did discuss this briefly earlier. Since LL has a delay on there, it won't be up for the first 30, 60 days. I'll basically just be living in the Twitter spaces and the Telegram rooms, and so will a lot of really, really great guys who have the time and energy to do so. And we'll have 24-hour like round the clock for at least those first 3 or 4 days, if not more, for sure, to make sure everyone's as safe as possible. The other, to Tangent's point, is whenever you're rushing with these things, there is a chance that if you don't ratio trade, or not ratio trade, but like bridge in the first day, maybe you're not going to get as good a deal. But if you click the wrong link and you don't use the right bridge and it's a scam, you lose all your money. And there's a chance that if you're trying to get into a project and you don't get in the first day, that you may not get as good a deal. But there's a chance that if you go to the wrong project and go to the wrong link and use a scam contract, that you lose all your money. Losing all your money is not ideal. So all of these things, like you're adding in a parlay on all of these things that say, if I screw this up, I lose all my money. Like whenever we're doing these things, that protection of principle should be like the first, second, and third thing. Like nothing else should even make it to the podium on what we're doing here besides protecting principle. Like everything should be secondary to that. So not like, again, when it comes to crypto, if I told you that you could have 100% sure that you'd have a 55x, would you be willing to take a 94% chance that you get 10x more? But if you roll on the other 6%, you lose all your money. No, that's a bad bet. Think through these things. Take your time. And that's the big thing about this stuff with V3 now. It's some of this is just game theory, a little edification. All of us are excited. We want to get everybody hyped. But the other part is like, hey, work through this stuff. You got questions about the LL DApp? Cool. Come ask now. You got questions about the bridge? Cool, come ask now. You got, ideas on how to move this stuff over, any of these things, fantastic. Practice them now. Come play with the dApps, because when it's live fire, when you're watching candles run up and down and all these things, and you're wanting to use the dApps, and you got sit there and got sweat in your palms, you don't want to be thinking about how to do these things or what your actual plan was. You just want to be trying to take nice deep breaths and either do nothing or do what it is you set out to do correctly and safely. So it looks like we got about 10 more minutes. DMF, what's up, man? It's good to see you again in here.
Hi, Wallace. How are you, man? Thank you
Good,
for
good, brother.
creating this platform for other people also to be making their questions. I wanted to make since I've been like a year and a half out. I wanted to ask if there was any Tornado Cash type of projects in Pulse.
There's two. Both of them have a bit of a question mark. One of them, I'll DM you. We have enough of a relationship that like I know that you'll bet it. The other, there's just a few things going on. I don't know, so I don't want to spread FUD and say negative stuff about the project. But I also don't really want to say it anymore in case there is a problem and then people go and search. So I'll send you a DM on one of them. The other is M87. Those guys have a contract on ETH and they do some other things. I think because of concerns over the regulation, they shut down their Tornado Cash fork. But I'll double check. So there's two, but I'll shoot you a DM on here with both of those, and then we can check them out. And I'll also go back and vet them myself. I just found out about the other concerns on the other project in the last like 48 hours, and I just haven't had a chance to go sort through it. But I can get those to you, brother.
Thanks, man. Keep it up, man.
By the way, I
Of
want to throw
course.
this in there. You guys, sorry, Wallers. You start checking out some of this, the ZK L2s. I think ZK Money. I think Richard put a post out about that. But you might actually be better off leveraging ZK than just regular mixers. So check those out too.
Thanks.
Yo, take a look at a chart. It's going crazy.
Dude, the DXY just made a new low. Hex is at the highest price it's been all year. Yeah, this is crazy.
Holy crap.
Yeah, 3.5% move on Ethereum. I think Bitcoin posted a crazy wick, but not regarding that. It's up 2.2%.
The stars are aligning.
That is crazy. But that other person who spoke earlier was right, that at first it went down hard. So that, I guess, maybe deliberate sweep out, like crush shorts and then crush longs, sorry, and then go long.
If I'm hearing what you guys are saying, you're saying that I'm more impactful than Powell. That's what I'm hearing. When it comes to the hex price, I'm more impactful. That's all I'm going to hear. I'm going to close the space. Later, guys. No, I'm just kidding.
That is exactly what I'm saying. Now, you guys know I just get excited by green candles, like overly excited.
So after that whole debate about going slow, that's the next thing you're going to say? Oh my God, I see a green candle. Freak out. Go ahead, Joey.
Be for too long. Hey, I'll be honest with you. I'm going to probably end up degenerating on this ratio trading if I can get a good enough, trade. I mean, if I get something stupid like, I don't know, 50 plus hex per Pulsex, I'm taking that bet.
Another cool question. I was thinking about. You remember a long time ago we were thinking about that there might be certain type of projects at launch that will somehow like to call attention to the sacrificers that, hey, we exist. We're gonna we're gonna send you a few airdrops. Do you know any page where we can see those type of airdrops on Pulse?
I haven't yet. There is a variety of them. I know a handful of different people have disclosed it. There's a few different big projects that have a few different plans on how to do some community issuance in some different ways. But that's another one that would be interesting, because that's part of the discussion with like Hex Live a second ago. One of the big ones is to be aware of dust attacks and actually verify contracts. And that's something that everybody gets lazy about, is actually going and verifying the contracts. And this will be the first time that it's really important for people to do so. So that'll be something that we definitely would want to list, that one, because it's cool to get free stuff. But you also want to know what free stuff is free stuff from people that care about you and what free stuff is dust attacks.
Exactly,
Yeah,
exactly.
one good way to like mitigate that risk for just anyone is Richard released on his Block Explorer, the contract verification stuff. And we were talking about this today. It's like if the contract, and it would be really simple for anyone to do it, just search on Richard's Blockchain Explorer and just see if the contract has open sourced its code on there. And then the contract address, and then, only interact with a contract that has their source published on Richard's Block Explorer. It'd be, a great step one. It doesn't mean it's not malicious, but at least the source code of the contract you're interacting with if it's some unknown.